Hey everyone, welcome to another episode of ADMAIL. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, and welcome to another episode of ADMAIL. I'm Adam Bergman, tax attorney and founder of IRA Financial. And on today's episode, I am taking 3 of the best questions that I received from talking to people at Bitcoin Conference Miami 2021, which was just a week or so ago. And spoke to thousands of people. We gave away over 800 t-shirts. I gave away 300 plus free books. So I spoke to lots of smart people that had no idea that you can use your IRA or 401k to buy cryptos or even real estate or other assets. So I got some really good questions. So I thought I would kind of go back old school to the basics here and really do an ADMAIL about 3 good, important questions that kept popping up when I spoke to people during Bitcoin conference. So for some of you, this just may be kind of a review. For others, this will be new and exciting and totally fascinating. So let's just jump right in. Question 1, can you do a self-directed IRA with a Roth? So easy answer, yes. Self-directed IRA, all it means is you are using your IRA to do alternative assets. Because if you open a regular IRA at Schwab or Fidelity or TD Ameritrade, all you're going to be able to do is what they sell, which is stocks, mutual funds, ETFs, and bonds and other fixed income. You won't be able to do real estate or cryptos or other alternative assets. Why? They don't make money when you do alternative assets. So they may call it a self-directed IRA, but all you're doing is being able to be given an option to invest in what they offer. It's not a true self-directed IRA. A true self-directed IRA lets you invest in anything that's approved by the IRS. Now, thankfully, the IRS doesn't state what you can invest in, only what you cannot invest in. And there's basically only 3 things you cannot invest in with an IRA or Roth IRA. 1, life insurance, although you could with a 401k. 2, collectibles like art. And thirdly, under Internal Revenue Code, section 4975, you can't do any transaction in any way that in any event, directly or indirectly, involves or personally benefits you or a disqualified person. And a disqualified person is defined as the IRA owner, any of his or her lineal descendants, parents, children, spouse, daughter-in-law, son-in-law, or any entities controlled by such persons. So you can't buy a house and live in it. You can't take your IRA to go to Paris. You can't take your IRA to buy yourself a car. You can't take your IRA to give your kids money to go to buy a watch. You can't do anything that doesn't exclusively benefit your IRA. So you can buy stocks, real estate, gold, cryptos, tax liens, tax deeds, private businesses, investment funds, venture capital, private equity, hedge funds, and much, much more. So whatever you can do in an IRA, you can do in a Roth IRA. The only difference between an IRA and a Roth is that a Roth, once you're over 59 and a half and the Roth's been open at least 5 years, all the income and gains are tax-free. No tax deduction. It's an after-tax account. But the whole advantage is if you can have patience and not pull the money out before age 59 and a half and the Roth open at least 5 years, you're good. No tax ever. So yes, you can do a self-directed IRA or self-directed Roth IRA. Same rules, same thing. The only difference is you're using a Roth instead of a pre-tax IRA. So that's a great one. Question 2, do I have to roll over all my former employer 401k funds to an IRA? No, you can roll over $1, $5, $1 million, 20 million. If you have 100 grand, you can roll over anything. $1, 50 grand, 100, 60 grand, whatever you want. It's your money. Do whatever you want. Now, the question is good. It says former employer. If you currently have a job that has a 401k, in most cases, you will not be able to get access to those funds to do a rollover to an IRA unless you're over 59 and a half or part of your 401k funds have invested. But generally, it's over 59 and a half or you leave your job. So most people who are doing rollovers are doing it from former employers. You worked at Tesla, you left your job, now you work at Apple. The money you had in a 401k Tesla can now be rolled over to an IRA where you can do alternative assets like real estate or cryptos or gold or investment funds. So you can do whatever you want. If you worked at Tesla and you had $200K in your 401k and you only want to put $12,000 in a self-directed IRA for Bitcoin, then no problem, right? Because Elon Musk's not going to let you buy Bitcoin in a Tesla 401k. So you're going to have to do it at IRA Financial through Gemini. You roll over what you want, even if you only want to do $1,000, or if you want to do all of it. It's your money. You do what you want. There are no limitations to do rollovers, which are all tax-free. You can do an unlimited amount of rollovers when you go bank to bank, financial institution to financial institution. If you take that money and hold it personally, you can only do that once every 12 months, and you can only hold that personal cash for 60 days before it's rolled into another retirement account. If you hold it more than 60 days, it becomes a taxable distribution and potentially subject to an early distribution tax of 10% if you are under 59 and a half. So make sure it goes direct from your former 401k employer to the new IRA. To wire a check direct. It shouldn't be to John Doe or Adam Bergman. It should go directly to IRA Financial Trust for the benefit of Adam Bergman IRA. That's a direct rollover. That can be done as many times as you want. No tax, no withholding tax, and the most popular and cleanest way to do a rollover. Third question, and this I got the most. This was probably the most popular question. I have a 401k plan at work. Can I still do an IRA? And this happens, I probably got this question 50 times, and it's a great question. The answer is yes. Now, the caveat to that is it may not be able to be a pre-tax IRA. It may have to be a Roth. So the way it works is under the 2021 401k rules, if you're single and you make more than $76,000, you cannot do a traditional IRA, meaning a tax-deductible IRA. If you have access to a 401k, you don't even have to make contributions. But if you work at a business that has a 401k and you make more than $76K, you cannot do a pre-tax IRA. You can do a Roth, but you can't do a pre-tax IRA. Now, if you're married and have your own 401k, not your spouse's, but your own, you can't do a pre-tax IRA if you make more than $125,000. If you're married, but your spouse has the 401k, not you, you can't do a pre-tax IRA if you make more than $208,000. Okay, so now let's look at the Roth IRA. If you're single, okay, and this has nothing to do with the 401k having a plan or not. This is just based off income thresholds. The pre-tax IRA threshold is based off if you have access to a 401k. The Roth is just your income. Doesn't matter if you have access to an employer 401k or not. If you're single and you make more than 140, you can't do a Roth. If you're married, file jointly, make more than 208, can't do a Roth. Now, there's a workaround. Congratulations, you make more than 140 or 208, no despair. You can still do a Roth IRA. It's called the backdoor Roth IRA. The way that works is you make an after-tax IRA contribution, not a tax-deductible contribution, which would be limited, right, based off the previous thresholds I mentioned, the single 76,000 or the married with your own 401k 125. You do an after-tax IRA, no tax deduction, and then you immediately convert it to Roth, even the next day or the next hour. And we do this all the time. We don't even charge for two accounts. We just charge for one account. And you put in up to $6,000 or $7,000 if you're over 50. And that's the income IRA contribution limit for 2021 for IRAs and Roths, $6,000 or $7,000. And you make the contribution after tax, and you simply convert it to Roth. There's no tax on the conversion because it's after-tax money. The contribution has not been invested, so there's no earnings on that contribution, which could be subject to tax. And now you have a Roth. Even if you make more than that 140 or the 208, you still can do the Roth. So, to answer the question, if you make more than 140 or 208, even if you have access to a 401k at work, you can always do a Roth IRA. So even if you may be limited on doing a pre-tax IRA, getting a tax deduction because you work at an employer with a 401k and make more than the income threshold, don't worry. You can still do an after-tax Roth, backdoor Roth, make the after-tax IRA contribution, immediately convert it to Roth, and then buy the Bitcoin or stocks or gold, whatever, real estate, whatever you want to do with that Roth IRA money. And you can still put away $19,500 or $26,000 to a 401k for over 50, plus any safe harbor match, and also do up to $6,000 or $7,000 in a Roth IRA if you're over 50. Pretty good, right? So there is no reason that you cannot do a Roth IRA. Even if you make $20 million, you can do a backdoor Roth and put the $6,000 or $7,000 in and then use that to do investments. So I got that question a lot. A lot of people thought that, hey, I have access to a 401k. I don't think I'm able to do an IRA contribution. And I had to, clarify and explain that no, you still have the ability, even if you make $500k a year, you can still do a backdoor Roth and take advantage of the $6,000 or $7,000 limit. There's no deduction, but the beauty, right, is that money, you do that every year. And after you're 59 and a half and the Roth's been open at least 5 years, bang, it's all tax-free and you never have to worry about tax, who the president is, tax law changes, all that nonsense. Everything's tax-free. You just need to be patient and watch your money grow. And then once you hit 59 and a half, you're home free. Pull all that money out tax-free. So those are probably the three best questions I got. I got lots of questions, but I wanted to kind of go back to the basics because many people I met, as I mentioned, didn't even know you could do alternative assets with your retirement account. The first question, we had a booth there. So the first question people wanted to know is, behind the booth, we had a banner that said, pay no tax, invest in cryptos. So they're like, what do you do? I'm like, well, we let you take your retirement money, IRA or 401k, and do alternative assets like real estate and even Bitcoin or cryptos. And most people's reaction was like, what? Really? It's legal? You can do this? So, and I had to tell them that, hey, I felt the same way. I was a tax lawyer for 9 years and I had no idea that you could use your retirement money to make alternative asset investments. So I was like, don't feel bad. I have a master's in tax law, worked for large law firms, and had no idea you can do this. So nothing to be embarrassed of. And it was fun just educating people. And I hope the questions I presented today on this pod will, at least to some of you, hopefully be new. For some of you, just a refresher. Hopefully I didn't bore you, but it's a lot of opportunities in the self-directed retirement world. Great opportunity to diversify, invest in assets you know and trust, generate cash flow and also appreciation on asset, depending on if it's real estate or other investments you're making. And ultimately, hopefully, just invest in something you trust and believe in, whether it's real estate or cryptos or gold or investment funds or private businesses or tax liens, whatever it is. Like, that's the nice thing. If you don't want all your money in stocks, mutual funds, fixed income, you're worried about inflation, or you just don't have a lot of faith in the markets, that's cool. It's your money, right? The IRS, if they didn't want you to do alternatives, they would have shut the door. They would not have created 4975. They would have just said you only can buy these investments. But they didn't, because they understand the power of diversification and having say in what your retirement account invests in. So that's it. I hope you guys enjoyed. I know I had some fun. For all the people I met at the Bitcoin conference, it was a pleasure. A lot of enjoyment. Hopefully I get to meet many more of you listeners. If you're watching on YouTube, thank you. Subscribe and check out my other two podcasts, Adam Talks and Ad Bits, and talk to everyone again next week. Be well. Take care.